Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, nice to have you in studio.
Hi, Julieta.
Markets seem to have eased up a little bit over the last week, and certainly this week is going to be key for markets, and maybe they're just treading water ahead of tomorrow. And we'll get to that in a bit. I know you want to talk about the S&P 500, but you'd like to start off by looking at what's been happening on the top 40.
Yeah, we're going to look at the top 40. We're doing a trade on the top 40 for this week as well. So I'm going to set the scene and then show you the trade that I've done for this week. What we've got up on the screen at the moment is a long-term chart of the top 40, and I know I showed this same graph last week, but it's just still interesting to keep it in mind. What it shows is this bull market that goes all the way back to the lows of 2009, and you can see how we've tested that rising trend a number of occasions over the last 5 years. We've recently just pulled all the way back to 41,000, which is where that long-term uptrend comes in. We did about a 12 or 13% correction on our market, and we do seem to have found quite solid support at that uptrend. And if we zoom in on that, now that's obviously a long-term, bigger picture graph, but now if we zoom in and we have a look, well, there's a couple of things I first want to talk about before we zoom right in onto the near-term trading action. What I've got here, first of all, is a chart showing the average true range of the top 40. And what's quite interesting to note here is if you have a look, that's the uptrend. Now, the bottom half of that graph is actually the top 40 index, effectively the chart that I just showed in the previous slides. At the top there, that squiggly line is the average true range. Now, what the average true range is it works out over a 10-day period. What is the average range? In other words, the difference between the high and low of the trading range for each day over an average of 10 days. Okay. And it plots that. Okay. And what you can see is there's a couple of interesting spikes there, and what you'll notice that those spikes are illustrated on that chart now. Notice how the spikes in the average true range have coincided with a market bottom each time. And that's quite interesting. It implies that volatility expands dramatically at the lows, and you get these significant range, huge ranges, huge trading ranges. That average true range for our top 40 at the moment is around about 800 points. So what it's telling you is that the averaged range on a daily basis over the last little while has been 800 points, just over 800 points.
Which is pretty damn
It's big. On an index which is sort of 41, 42,000, you're talking about a average trading range of nearly 2% for the day. And it's not surprising that we've got that reading. I mean, we've seen days on the market recently where our market's traded in excess of a 1,000 point daily trading range. But anyway, what's quite interesting to note is that how in the past that average true range has spiked at all of the prior market bottoms, and it's spiked once again, and it coincides with us reversing up off that long-term uptrend. So it's quite an interesting dynamic, and it does again suggest to me that we've got a bottom in place on our top 40 index here.
Because that essentially is what I suppose we've been wanting to see out of the last week or so's trade, or the last 10 days, is whether the bottom for the market is in place, and it's what we discussed last week.
It is, and I think there's more and more signs to certainly to indicate to me that I think the bottom probably is in for now, and that we're likely to rally up off of these lows further. I mean, we have rallied already, but I think we've probably got further to go.
So you want to zoom into the chart of the top 40 index?
Yeah, so here we've got a chart of the top 40 index. Now this looks over the last 2 months really. So you can see this big decline that we saw from basically almost 47,000 on the top 40 all the way down to 41,000. So we had a 6,000 point pullback over there. Now what's happened is we've reversed quite nicely off the lows, and we seem to have bounced, and now we've been consolidating over the last couple of days. Now that little consolidation to me is looking as if it's forming a triangle pattern, and in fact today we're beginning to break to the top side of that triangle now. What's also interesting is that I think this is also an inverted head and shoulders that's playing out here. Now it is a bit skew, but you can draw them like that. It's still valid. And if I take that inverted head and shoulders pattern, and if it were to be validated on a break above the neckline of that pattern, theoretically and technically that could actually justify a rally all the way back up to 46,000. It's difficult to see that happening right now, but that's what it's saying. And very often, you've got to listen to these technicals because they do very often play out as the measurements would suggest. So if we get a move above the neckline of that head and shoulders pattern, then it does look good. But the trade that I'm doing this week is actually based on that smaller pattern, that smaller little triangle pattern that I've identified there with the dotted lines.
Okay, maybe we can, I don't know if you can go back to that or...
Yeah, well,
okay.
let's have a look. Now, what I've got here is an hourly chart of the top 40, the spot index, but this is actually the IG Markets SA40 contract. Now, this is interesting. This is a contract that we've never traded before on the show. It's a smaller contract. It's called a micro contract. So it works as every movement represents 2 rand per point on the contract, right? Now, remember, we typically trade the top 40 future on this show, which is 10 rand per point. But now this is quite nice because it effectively gives you exposure to 1/5 of a normal top 40 futures contract. So for viewers out there who are wanting to trade the top 40 but don't have the financial means to take exposure to a full top 40 futures contract, there is this product available, which is a much smaller product. It's got a much smaller notional value, and therefore you can actually trade the top 40 future, well, the top 40 index, without taking this mammoth exposure which the top 40 future would ordinarily require you to take.
But obviously you'll get the same gain or loss depending on the movement, so it tracks it exactly.
That's it, on a percentage basis.
Okay.
So in other words, we're talking about an index which is now around about 43,000. A normal top 40 future would therefore mean that you're taking exposure to 430,000 rands worth of exposure. This little contract is 1/5 of that size, so we're talking about taking 86,000 rands exposure on one contract. So it's a much smaller contract, and it's quite appealing for those that don't have big financial means that would like to take a slightly smaller exposure to the market without having that excessively large exposure that the top 40 future normally gives you.
Yeah, so more of a dabbler's contract.
And definitely a good learning ground as well if you're just new to trading. It's a good product to use if you just want to start trading with smaller positions. It's a great product for that point of view.
Okay.
Anyway, we're doing a trade in this thing this week. And part of the reason why I'm going for the micro contract is because we do actually have a top 40 future long already against our options structure, which we'll talk about in a moment. But if I have a look at this, remember I spoke about a triangle pattern that was forming on the daily chart. Now, if we look at this hourly chart there, you can see that triangle pattern quite clearly illustrated there. We've broken to the top side of that triangle today. So I've gone along, I'm actually buying 2 of these. So 2 contracts of the micro SA40
So about
micro
170,000 rands worth of
That's
exposure.
it, 173,000 rand, I think it is, of exposure that I'm taking. I'm buying 2 of them at 43,080.
Okay.
And my stop loss is below the lowest point in that triangle there, which was at 42,350. So I'll exit if it goes underneath that prior low. But given that this triangle has broken to the top side now, I think that this can probably justify a move towards 45,000. And that's what I'm really looking for here.
But 45,000 as opposed to the 46,000, which would be indicative if the head and shoulders pattern played out.
Yeah, this is a bit more of a conservative way of playing it. The 46,000 might well be valid, but I think let's not be too greedy. I'll be happy to get 45,000 as things stand right now.
Okay, so Garth, so you have entered the position?
I have, and if we look at the mechanics of that trade, I said I'm buying 2 of these at 43,080. My stop loss, 42,350. That means that I'm risking 730 points. Now, given that these are 2 rand per contract, and I'm doing 2 of them, that effectively means that my risk, if I'm wrong, and my stop loss gets hit, my risk is 2,920 rand that I could potentially lose on this trade. That works out to 0.83% of the value of our account.
Okay, so it's a small position.
It's a small position, absolutely. And my target is 45,000. My risk to reward, therefore, is 1 to 2.63, which
That's
I think is
not
not too bad. And then my exposure on this trade is 172,000 rand. That's the total exposure that I'm taking with 2 of these contracts long.
Okay, so that's quite a nifty little product to use.
It is. It is, and something we might use a bit more in future.
Garth, but it's interesting that you are going long when, I suppose, at one point, having a long, a top 40 future, having gone long of the market, at one stage, it was quite worrying. So I know you want to talk about the put spread structure and where you're at with that at the moment.
Yeah, well, let's have a quick look and give an update on where we stand with this thing. So here's our put spread structure. Just to remind you, anything above 45,000, the structure costs us nothing. Below 45,000, it makes money. It makes its maximum profit at 43,350, and then it starts to give that profit back if the market were to fall lower than that. Now, what I did a while ago, which was not such a good idea in retrospect, but nonetheless, we can't change things. I went long of one top 40 future at 45,200, and the payoff of that one future is illustrated by the dotted line over there on the graph. Now, where do we stand at the moment? Well, currently the market's at about 43,600 on the futures market. What that means is that our option structure effectively is making a profit of 28,000 Rand for us at this stage, and our futures are losing us 16,000 Rand. So there is an offset there. Net, we are theoretically up on this trade, but remember that I can't exit these options easily right now. I need to run it out till closeout.
Yeah, which is what, third week of December?
Yeah, so it's still a while away, probably, nearly 2 months away from that. So it's still a while.
In theory is always great when it's the practice that it can get rather hairy. So
that's it, and this certainly has gotten rather hairy, because you'll recall that about 2 weeks ago we were down here in the danger zone, and I was battling to sleep at night. But it has recovered somewhat, and I'm sleeping again. and it looks okay, given the analysis that I showed you on the top 40 before this. It does look okay for a move to the upside still. Okay,
so you're in there holding tight, but perhaps not with the same white knuckles that you were doing 2 weeks ago.
Correct, yeah.
Okay. Garth, so, and I know you want to bring up a chart of the S&P 500, because this is a big week. Or, I mean, I say that it might not be a big week at all. It's the Fed's, the Federal Open Market Committee meeting this week, and they're more than likely to announce the end of their quantitative easing program. It's what they'll say about interest rates that I think everyone's looking for, although they probably will say the same thing that they've said last month. Yeah,
that's it. We've got the Fed meeting on Wednesday night, and what everybody's expecting is that they'll bring an end to quantitative easing, and that they'll probably give guidance on interest rates, which is the same as what they've done previously, which is to say interest rates are likely to remain near zero for a lot longer than what we think.
Or the words a considerable time.
A considerable time, that's it, very diplomatically stated. And that's probably what they will come up with. I think that's what the market is expecting. What are the potential surprise factors? Well, I doubt they would surprise us with anything on interest rates. What could they do on quantitative easing? They could possibly delay the exit of quantitative easing, or maybe they don't withdraw entirely. Maybe currently they're buying back $15 billion a month worth of Treasury securities. The expectation is that they'll wind that down to zero. And I'm wondering whether there's not a case to be made for something between 15 billion and zero. That's a possibility. So let's see. I think that's where the element of surprise might come in.
Okay.
But I think, to be honest, I think there's the propensity for surprise is more to the upside here. If they withdraw quantitative easing, well, that's expected already. And the potential positive surprise could be if they delay the exit of QE. That might actually put a bit of a rocket under the markets, maybe. I don't know. I'm speculating. Anyway, let's see what Janet Yellen says at tomorrow night's FOMC meeting. The two charts that I've got here now, I just want to show you, illustrate the fourth quarter performance of the S&P 500 going back. Now, this is quite interesting. This chart goes back to 1989, and it just shows you that more than half of the gains that we've seen on the S&P 500 in that time, over 25 years, have happened in that final quarter of the year. So we're into a very bullish time of the year, seasonally. All right, you can't necessarily extrapolate this forward and say, well, it's definitely going to happen again, but certainly 25 years of history here is what we've got. And the next chart is also interesting. This just shows you the monthly gains, the average monthly gains on the S&P 500 in every year since 1928.
Cheapest. Okay,
so we're going back, 90-odd something years. And you can see October, November, December generally are quite strong months for the market. So given that seasonal aspect, it does sort of lend itself to a bullish year end.
Okay, well, let's hope so. Garth, we've probably got 20 seconds to wrap up.
All right, so quickly then, let's have a look. Our portfolio, 351,000 Rand. It's up 40% for the year to date. Not too much different from last year.
Yeah.
You can see the trades that we've got open there. And then the last thing, my final high probability trading course of 2014 is on the 15th of November. Anyone that wants to attend that, please email me, garth@traderscorner.co.za, and I'll send you the information.
And obviously the charts, if they want to have a look at them again, those S&P 500 charts, they can do so on the web and on your website tomorrow. Garth, thanks very much for joining us as always. That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.